Today's market call is presented by FactSet, financial data and analytics powered by tomorrow. I appreciate you indulging us on this June 18th. It is not 1 p.m. on the East Coast. It is noon. It's noon here in Indianapolis. Carter Worth, G Swizz here for Market Call on this June 18th. Carter, how are you?
I'm good. It's nice when you have a holiday pending ahead. Yes. Very rare to have a midweek. Now, of course, they did used to close the market one day a week when there was no computers, right? So they could get caught up with all the tickets. Obviously, in the early part
bygone era, as they say.
Can you imagine? Can you imagine having no computers and you put in your order? You think you're buying something because it's trading at 72 to 74, and they fill you at 120. You're like, that's not what I signed up for.
That doesn't sound like what I came here for.
Yeah, but that's what happened.
It's interesting, real quick, and we'll get to the markets in a second, but. I saw over the weekend, U.S. Olympic trials are here for swimming in Indianapolis. So the people basically, they will qualify to go to the Olympics in Paris. This is a huge deal. It's at Lucas Oil Stadium, which is where obviously they play football. The Colts play football there. They built swimming pools in this place, and it is unbelievable. And I was really excited to watch it. As it turns out, it goes through Wednesday, and you guys can Google this, or maybe Amanda can put it in the show notes, but a very close family friend, and when I say close friend, I've known the kid since he was, in middle school, my son's best friend's brother and the entire family. Jack Alexi is the fastest swimmer in the world at the 100 meters, and he is swimming tonight. So I'm going to go tonight with his family and watch him swim. So, as they say, the timing of this entire trip is a bit fortuitous, but that's neither here nor there. But let's go to the rundown, Carter, because, again, it's a continuation of a theme that we've seen for a while, this bifurcated market. You brought a series of charts that will illustrate that much better than I can explain them with the verbal word. Chart check on copper and Bitcoin. A couple interesting things going on there. I can't really figure out what's going on in Bitcoin. Maybe you can help. And we're going to look at some housing stocks. We had Lennar last night reported earnings. I thought the 150 level might be support. You might have a different view on things, but we're going to take a look at that as well. So let's go right to our S&P chart because we've drawn that prior high horizontal line. I'm not suggesting this is anything, but we just wanted to sort of start with our charts. And then you obviously see this pretty significant breakout to the upside that we're experiencing now. So that's our chart. Let's talk about it real quick and then go to yours.
Right, so that's the sort of November, April advance where the S&P is up some 30% off the low, and we got that 6+% dip, only to, of course, go on and make new highs. But that key moment in the last days of March, early April, is where most aggregates are still stuck, meaning it's the S&P and the S&P alone that has gone on to make a new high after dipping in April. Most other aggregates and parts of the market still are below their late March, early April highs.
It is, and I've been sitting here reading all morning before I go do something else after our show. And, just trying to get a sense, what am I missing? And there are obvious things that I've been missing for quite some time. And then there are other things that continue to sort of galvanize my thought process as to why things are sort of out of kilter here. And then when I look at your charts, and let's go to the first one about bifurcation, it all starts to make sense again. So the upper chart is obviously the chart that we just brought forth with that same horizontal line. So we just wanted to illustrate it first. These are your charts. And then the bottom, obviously, equal weighted the index, S&P 500 equal. It's an entirely different chart. And again, I'm not suggesting I understand this or I know how it resolves itself. But what I will say is, something's got to give here, Carter. So walk through this.
Right. The point is that, as you see, the equal weight was doing just as well as the actual into the March, April peak. And this is a report from Sunday night for Worth Charting subscribers. And we looked at about 40 or plus other aggregates. Each chart holds the S&P as the top panel, and then the bottom panel changes. So, for instance, this is the equal weight, And again, it makes a peak. Here's the Russell 2000. Let's flash those two, for instance. Equal weight Russell, equal weight Russell. But the message is the same. If we keep going, we have other aggregates, New York Stock Exchange Composite. We just roll Dow Jones Transports. We can just roll through S&P Energy sector, right? S&P Financials. I don't know what other ones we have. Consumer discretion. I mean, that's Home Depot and Nike. Healthcare, and so forth and so on. And you can do this with the Nikkei. You can do it with the advanced decline line, and so many other themes and aggregates. And so the question is, how does it get resolved? And there's only, one of three ways, of course. The S&P 500, which is 30% weighted in the top 10 names, is got the answer right. And this other areas of the market play catch up. Two, the top panel is wrong, right, so to speak, and that there's just too much money, and that the bottom panels are telling the real message that things are maybe slowing and so forth. Or, of course, there's some combination of the two.
Which is typically, again, that when you get asked those types of questions, what's more important? The answer typically is it's a combination. I totally get that, and you're not ducking at all. But let's just, I think there's 7 charts or so that you brought, and each one on the bottom tells the same exact story. So it's not like it's just one sector or one group that's been underperforming. It is a series of them. And again, I can't speak that intelligently about the history of this, but I'm hard pressed to believe over the course of history, you've seen the outperformance in the major indices, for the S&P 500, and the underperformance basically on everything else, which again, I don't.
Well, the last time it happened,
you're dumbfounded to a certain extent.
Yeah, the last time it happened was the peak in late 2021, early 22. So the S&P was making highs at that point, but various aggregates and sub industries within the market weren't. And this bottom panel could be S&P 500 chemicals, Dow and DuPont. It could be S&P 500 machinery, from Ingersoll Rand to Caterpillar to John Deere. The bottom panel, we did some 40, 45 different iterations, and not one is, quote, confirming, and that's the expression people use, the strength in the S&P. And we know what it is, right? It's NVIDIA and it's Apple, and Apple just, tacked on $300 billion just last week. And so there's 2 ways to interpret it: that it's just idiosyncratic, and that the money is properly going to superior operating businesses with great moats around them and a lot of cash and quality balance sheets, Microsoft and Apple and NVIDIA and so forth. Or it can be interpreted as somewhat of a defensive thing, right? The most offensive thing equity players do at the professional level when concerned is they go defensive, right? So the 3 most offensive things are staples, utilities, and growth stocks, right? Because if you're going into a slowdown, growth has its own internal engine. I mean, NVIDIA could grow regardless of Main Street, right, so to speak. The last thing people want to do is cyclicals. And you'll see that the cyclicals, whether it's the autos, again, and the machinery and so many other areas, restaurants, are all just struggling. So it likely will be resolved. You can't do it forever. Who the heck knows? My hunch is that it's resolved by the whole thing going lower, but every day that it goes higher, that looks like just, not a good conclusion.
No, and listen, I've been in that camp incorrectly in terms of me specifically for quite some time. And I struggle with it because, you don't want to lead people astray. I mean, the last thing you want to do is hurt people in any way. But the flip side of that coin is the last thing you want to do is sort of lead people down this, what I believe to be primrose path, which we all know the ending of the story. And, that would be, to me, quite frankly, given the choice between the two, I'd rather be more, I guess, conservative and more on the side of and caution than I would be, party on people. It's never going to end, because it would be and I say this sincerely, I'd have a hard time sort of living with myself if I were one of those people just telling people, go balls to the wall in this environment and nothing can stop it, because I will tell you the warning signs are there. And again, you're looking for indicators as to when this will stop. And we go back, if Amanda and or Jacob, and I go back to this a lot, but if you go back to sort of a 3-4 month chart of NVIDIA, that March 8th, that Friday, March 8th, really stuck out to me. And I think it stuck out to you as well in terms of the engulfing pattern that we saw in that stock. Made a new all-time high on that day on March 8th, closed effectively at the lows, traded sideways for a period of time, and then it had a pretty dramatic sell-off. So in some ways, that engulfing pattern actually worked because you did see the commensurate sell-off, although it took a lot longer than I thought. And then you and I had a conversation, I would say a month or so ago, maybe a little bit longer, and you said, enough time has passed now and it's done enough work where it's probably going to resume its trajectory higher in NVIDIA, and you were spot on. So that's that. But what type of patterns, and that to me is the most important one, to give an indication that this S&P is finally exhausting itself? Do you think it's going to take place in a couple individual names, or do you think for maybe the first time in a while the S&P might lead?
Yeah, well, the S&P in principle can't, right? Because it doesn't exist. An index is just
right.
its constituent parts. But sure, you would expect some slippage. But it is a very bifurcated market. To think that banks are struggling. Again, these are the financial sectors, the third largest by weight, I guess, and at this point, and it's the transmission mechanism for the economy. Banks are struggling, and regional banks are really struggling. So at some point, and this financial sector here on the bottom, that's got things like Berkshire in it holding it up, right? And Progressive, big safe insurance stocks, and so. The real message is more sort of worrisome than even the picture of the XLF would imply. But we'll see. There's also, it's just, we've come a long way. That concept, there's nothing wrong with corrections. Why they use the word, right? It implies that the move is getting steep and uncorrected, unnatural. And we certainly have that in semis. If you were to pull up maybe a 5-year chart of the SOX on the fly, you'll see that this is getting increasingly steep and far above. And there's now others besides just NVIDIA participating. Micron is participating, Qualcomm and Avago. And so there's a simple exercise. If you were to, and that's the job, right, just suspend what one thinks they know or does know, all biases, and remove the fact that it says iShares Semiconductor upper left. It's just a chart, and you didn't know what it was. You'd say, well, looking out over these past 5 years, this is about as high as it gets above trend before it has a give back. Now, does that mean that has to happen? No, but that's what the premise is. And so at a minimum, the way to test it, I think that concept is proof by contradiction. Would we double our longs in semis here? Okay, well, that is aggressive stuff. So let's use that as a point of departure. I think most people say, no, I think I'll stay with my long, but I don't want to add to it. All right, well, if you're not added to it, there's a reason. You're a little bit cautious. Maybe you're thinking, hey, it's stretch. So the next thought beyond that is, well, if it's a little stretch, maybe I'll reduce a little bit. So at a minimum, you sell calls, maybe put on something more complex like a risk reversal, or you just trim the longs, but just to stay, hey, I'm long and strong. There's no technique to that other than,
no.
Hey, I'm just riding the momentum.
That's exactly. And listen, as you said it before, there's nothing wrong with that either. That is a strategy, but you just have to know what you're getting yourself into. And before we get to copper, the things amongst the many things that have and continue to concern me is when stocks seemingly rally on the same piece of news over and over again. And to a certain extent, you're starting to see that, I think, in the semis. Let's take a look at copper because, this had a monster move to the upside. We broke out of that pennant formation. I remember having the conversation about it. We basically traded up to those prior highs. You thought it might exhaust itself. It did. We've basically given half of that move back. I've been bullish copper. I will remain. This arrow suggests you are as well. Talk me through it.
Right. So we put out a piece today saying time to buy back that which was sold on May 20. The May 20 sell report for subscribers was itself a follow-up from the October buy, meaning sometimes you can get the sequencing quite well. Sometimes you get trapped 3 times, 3 losers in a row. But the converging trend lines, we put out a report, buy copper. Okay. May, 1 month ago, sell copper. And now we're going back to buy copper. So why? Let's draw the next lines. Is it support? Not really, but it's a little bit of support, right? You're back to a reference point. Let's put some more lines on there. It's a halfway back. Does that some magic to that? Absolutely not. but it has to be noted. And so a 15+% sell-off at a point where copper was loved a month ago. It's going to go to all-time highs, all the press, and now, oh, copper's in trouble. You usually want to shoot against the press, opposite way.
And you've been successful in all different things doing exactly that, be it rates, be it energy, be it individual names. So spot on. You know, it's interesting. You can eyeball things when you do this long enough. And, you know, my eyeball suggested this pullback was 50%, and your work basically reinforced that. So I'm glad we lined up on that one. But, you know, when people talk about copper, they think of basically two names. The first one they think of is Freeport-McMoRan. So let's take a look at this. You know, this is a name. So this is our static chart. And we'll talk about this. If you could do a longer term chart, you'll see that that recent high we made basically challenged prior highs that we saw quite some time ago within reason. And you can see that there. If you go even longer term, it probably looks a little bit better. We've seen the commensurate pullback on the back of probably copper. What are your thoughts here? I mean, am I safe to say that if you are bullish of copper at these levels, thinking that it's going to sort of restate itself and resume that trajectory higher, is it safe to say that Freeport Mac will do the same thing?
Sure, the correlation is very high, as would be expected. So a pullback in copper, a pullback in the leading U.S. copper equity, and buying for bounce here.
I'm with you. It's a name that I like, and I'll tell you the copper story. Obviously, the volatility is there, but if you go and read, and again, I try to do my best with this stuff, you read a lot of different things. The copper story, the fundamental story about copper is in place, and the supply-demand imbalances over the next few years are significant, which is why I think it took that huge leg higher. But of course, to your point, when everybody starts to talk about it, is typically when it exhausts itself, but that doesn't necessarily mean the story's over. One of the other names that I look at in the space is Coeur d'Alene. So that's our static chart, Carter. And I want you to take a look at that. Now do a longer term chart, and it might be too late now. You know, this bearish to bullish divergence might have happened already. But if you look longer term, I mean, this was nowhere for a long period of time. And then finally, as the moving averages started to turn, this started to turn as well. Now, maybe it's too late. Now, maybe I missed it. Or, you know, maybe it's just consolidating here for the next leg higher.
Yeah, high correlation to silver in this case, but a turn nonetheless, and it holds the COVID low, which is important, and the general path is higher. This is a chronic issuer of shares, so the number of shares outstanding here in 2024 is considerably higher than it was in 2015-16. So to some extent, much higher prices. If you were to do a, check this out, do a 20-year chart maybe while we're standing here, and what you're going to see is, of course, the share issuance. This goes back, and if you went even further, it's a stunning sort of thing, because they are constantly. It's a heavily indebted operation, and the thought of going back, to the 30s and 40s, this is not a reality. But
I agree with
why
that.
can't you trade it to 10, right, and make some money?
Well, that's exactly right, and that's my point. So the dilution is there, but it doesn't mean you can't catch a little bit of a move here without question. The other thing that that I've had trouble trying to figure out is Bitcoin, and I will tell you that we've made a couple moves to the 72,000 level, and each time it's been rejected. I would have thought the last time it would have gone blowing through. It hasn't. I think I understand what Bitcoin is. To me, it's just sort of an overlay to Fed speak. I don't think it's coincidence that the first time Bitcoin topped out, I think it was December of 2021 or thereabouts, is the same time the Fed basically said we're going to embark on this rate hike cycle, or effectively the Fed saying, we're starting to get religion here. And I think, it wasn't coincidence that Bitcoin had the move to the downside that it had. As more and more people started to be convinced that the rate hike cycle was over, and oh, by the way, at some point in the fall of last year, not only are you going to get one cut in 2024, you're going to get maybe 6. That's when Bitcoin got back on its horse. So that part all makes sense. The last couple months, though, to me, doesn't. So help me understand what's going on in Bitcoin here, because it's seemingly doing something out of the ordinary, in my opinion.
I mean, the one thing, of course, is that it's highly correlated, turns out, to the general equity market. The S&P peaks basically Jan 4, 2022, Well, 1 month prior, Bitcoin peaked in late 2021. The S&P bottoms in October of 2022, Bitcoin bottoms in October of 22, and it's been straight up since. So it's not some special asset or unto itself. It turns out, just a risk asset. But if one were to try to put some lines in, the first that comes to mind here is that is a very important bottom that played out well. Second iteration, we're back to, right, the former high. And this is perfectly normal to back and fill and contend with the former high. One could say, yes, but I want to play for the breakout. All right. One could say, yes, I want to play that it's failing and it's putting in a double top, for lack of a better expression, and I'm going to play it down to 60,000 to trend. All of that's valid. Really, here and now, it's a pair of twos, and I would leave it alone.
Yeah, it's again, I'm trying to understand what it means in the context of everything that I'm seeing. I would have thought, again, maybe I'm making too much out of this minor move from 72 down to 65, and it is really minor in the broad scope of things. Or maybe it's the start of something else. But I'll tell you, it feels as though, when I say feels, I mean, I know that's, it feels as though it wants to trade back to that uptrend line. So that probably in time decay gets you right around 60,000 or so. So we'll see if and when that happens. Let's take a look at home builders. Yesterday on Fast Money, Lennar reported. We had a pretty good conversation. We had mentioned that Lennar basically traded up to a prior high and failed. Last night, I thought 150 would be support. You can see where 150 makes sense. Sort of those prior lows. Their delivery forecast was disappointing, which is why I think the stock took a leg lower. I thought it was worth a look at 150. I think your work suggests otherwise.
Well, if you put the move in Lennar in the context of the market move, obviously it having moved from 105 to 170, that's not a 28-30% move. That's a whole heck of a lot more, meaning there's just beta here. It's a beta trade. It's tied to rates. That's when rates sort of cooling to some extent. My own hunch is lower. Here's a chart with no lines. Let's put some in. And so the internal trend line, in effect, kind of a topping out formation, the double top in the next iteration, worrisome. I don't think it holds here. And again, just to put in kind of essentially went from 105 to 175 in a period where, you're talking about 60+% in the period where the S&P goes up 28. It just feels heavy.
Yeah, look, I'm not going to disagree with you at all. I thought short-term 150, but to your point, that little top formation, that uptrend line, the fact that, again, we seemingly stalled there is concerning. So a breach of 150 probably sets you up for, the little mini gap fill, and then maybe a look back to where we were. I don't know if in the fall, but I will tell you, if you're in the camp that rates go higher, and in about 40 minutes we have a treasury auction, we'll see how that plays out. I mean, this might be, to your point, in no touch. KB Homes, on the other hand, a little bit of a different story.
A bit better, right. And so the way to look at that, of course, is not just this absolute chart, but to look at the relative performance of KB. So this is KB's relative performance to Lennar. KB has been the loser. It's been underperforming Lennar in 19 and 20 and 21 and 22, but it is a bearish to bullish reversal. The way we draw the lines this way, another way, you can see that way, meaning this is what pairs trading is all about. A lot of our clients are pair traders, and they're beta neutral, dollar neutral, and for everything they've got committed on one side, they have to be hedged completely in principle with a similar acting security or asset. I like this. I would be, again, playing the pair trade.
This is an impossible question to answer, but I'll ask it anyway. Given what you just said, is this going to, again, this is KBH's performance relative to Lennar, which I think we all understand. If this will continue, is it going to continue because Lennar basically falls out of bed? Or if you go back to that KBH trade, that lower left, upper right, which has been in place for quite some time, continues. And I know the answer is some combination of the two. Again, I had alluded to that earlier, but typically one dominates. If you had to guess which one will dominate.
Yeah, I mean, look, this Scott earnings coming up, so this drops in gap zone earnings. That'll make that pair trade for at least tomorrow not a good bet, because Lennar has already dropped in response to its earnings. KBH has not. but KBH's relative performance to home builders in general is better than Lennar. I would just play it as a pair. How it continues is if Lennar is good, of course, tomorrow, that will make the relative strength line go up even further on the brown line chart, or just hold steady. That's my hunch.
Fair enough. Let's take a couple questions before we get out of here. I am McLovin. Love that. Energy. And this is thoughts on Occidental chart. Buffett continues to buy this name. And this has been going on for a few years. So let's open Oxy chart. And in my acronym, I think last year, Oxy was one of the names. This is fascinating to me. And this is just me. And if you go longer term, you'll see what I'm talking about. Typically, when Warren Buffett announces he's in a name, the stock immediately goes up, 5, 7, 10%. And then it maintains. And then when he adds to it, it builds on it. And then when he adds to it again, it builds. Occidental has not done that at all. As a matter of fact, the stock has gone sideways through this entire period of time when he's basically been adding and announcing that he's added to his stake. So I don't know what to make of it. I don't know if you know what to make of it. I think the entire energy space is still attractive. It's obviously having a bit of a day today. Is this a consolidation just sideways before the next leg higher? Or am I making, again, obviously understanding that Buffett is building a tremendous stake in this company and something's going on?
I mean, this is what apparent twos is. I mean, on this longer term chart, we know that it's been here since the spring of 2022. We're now the summer of 2024.
Mm-hmm.
So 2 years just with no character. But the standard 1 year chart, the sell-off is a meaningful sell-off, and you're down to a level or to such an extent where playing for a bounce makes sense.
It's incredible to me. Again, just with all the news in energy, add Warren Buffett on top of it, the fact that this is the 5th or 6th iteration of this, and the stock can't get out of its own way. I'm inclined to stick with it. I think there's more here. AM McLovin. But with that said, man, it is a tough slog for sure. Adam Beauregard, is Dell making a comeback? Now, as shitty as I am most of the time, this is actually one that I think I did a decent job. So let's pull up a Dell chart a little longer term. And you obviously had that sort of late parabolic move. We talked about it into earnings. Both Dan and I thought it was probably way ahead of itself and it could pull back. Now, if you basically shorten the duration, I thought the stock could get down to about 129, 130, which was sort of that prior all-time high if you go back and look. And that should be support. And as it turns out, you know what? That was sort of right. So to answer your question, I do think this is a bit of a continuation to the upside. So I do think Dell is okay here. That's just my view. So thoughts on Dell? You're probably not all that intrigued by it one way or another, but I do think we just held support on the back of that earnings release a couple of weeks ago.
Yeah, very aggressive stock up and to the right, gapping higher on each quarterly result. And then, of course, it gaps down on its last quarter. It's repairing itself there. But here and now, it's truly just in the middle of the tennis court. As the expression goes, you can't play typically. The balls hit you in the knees. You must play from the net. We have to drop back to the baseline. Tough spot here. Get long here. Why? 152, and then what? It drops to 147. That sucks.
You don't want
to get short here because you think it's going to drop to 147. Get short here 152, and it rallies to 156. Okay, that's going to hurt. It's just in no man's land.
You're in no man, and you don't want to be in no man's land.
Nope.
Trust me. Michael Del Sesto, I'd like to get your views on WTI. Well, I've been bullish and right. I've been bullish and wrong. I mean, that's been back and forth. You've done a masterful job, I think, of pointing out when the euphoria is there, that's the best time to close your eyes and fade it. And when the disdain and basically people throwing in the towel happens, it's the best time to own it. It's had a pretty significant bounce here. We're right back to basically where equilibrium should be in the form of a lot of different things, not least of which that 50-day moving average. So thoughts on crude. Again, I want to be clear. I've been bullish. I've been right. I've been bullish. I've been wrong. I'm not going to fade away. I'm still pretty constructive on the underlying commodity. Your thoughts?
Big move, 73 to about 81. The takeaway really is to buy energy shares, right? So XLE in aggregate is the play, or Oxy, Buffett stock, or Exxon because it's the biggest. But I think that's the player. The bounce itself is come a little too far. I would fade this.
Fair enough. Last one from Jignesh Shroff. Thoughts on Alibaba? Man, oh man. This is one, and we've talked about this since Halloween of, I think, 2021. And don't at me if I'm off by a year, but this has been upper left, lower right. I mean, it's just been an awful, awful stock. With all that said, I guess it was 2020, so I apologize. With all that said, you have seen significant bounces along the way. At some point, you've seen 50% bounces along the way. And I thought we were setting up for a similar one if you look at a shorter term chart recently when you had a really nice move. But man, oh man, it's basically given the entire thing back. So I guess that was a bit, maybe that's all it was. Maybe that move up to sort of 90-ish, that's all it was. I thought it had a lot more legs than that. What are you thinking here, Alibaba? And I'm sorry to put you on the spot. I know you haven't looked at it.
If we have the 5-year chart back, what you'll see, the important distinction is that Tencent, now let's go to Tencent, just remember this one. And now if we look at Tencent's 5-year chart, you see just how much better this has been. And there's a reason for this, right? This is look at that. Okay, so yep. Baidu has struggled and Alibaba struggled. This one really made the turn. And I would favor that for that reason. But the aggregate of all of this is KWEB. We can look at that here on the same 5-year time frame, KWEB. And this is sort of internet tech. And it's a blend of the two, not as bad as Alibaba, not as good as Tencent. But my thinking here, we can pull this back maybe even further to all data, maybe try 10 years. It won't go back much further than that. But what I would say is the following, that let's call the spike not real. Let's just used to be called whiteout, but since it's a black screen, let's black out that spike above 100 and say that was excess. Okay. Let's also do the same with the plunge in 2023. If this is a legitimate bunch of businesses, legitimate Baidu and Tencent and Alibaba and so forth, if they are legitimate and they will ultimately survive, we have a circumstance, to my way of thinking it, we get long and we're wrong. It's just going to waste our time. 32, 24, 31, 26, 29, 30, and we just grind along the bottom, or it actually does come to life and make the turn. Because what you're talking about, the third scenario, if this starts going on to make new lows, that means you're talking about these companies in many ways going out of business. And so if one can, one could say, yeah, all China's going out of business. That's a different subject. My own hunch is to basically be structurally long an aggregate like this, looking at a concept of asymmetry, that if we're wrong, we probably just churn and waste time. It's a value trap. But if we're right, what if we get paid off at 37 or 47 or 60? Forget about 100.
Let's take a look. Last question I apologize, Carter. Neil Griffin asks, is this a good entry point for BHP Billiton? I don't even know if they call it BHP Billiton anymore. I think it's called BHP Group. So if you pull a chart up here, this one has been some fake outs along the way. Yeah, if you see what I mean, I knew that was the case. But if you look, we're right back to those prior levels of support, and it's happened a number of times. So I guess given my view on the underlying commodities that make names like this up, one would think I'd be bullish here. And against that support, I think you can, Neil, have an entry point. But man, oh man, this has been fake out city for quite some time.
Yeah, a pair of twos for me. Just a lot of chop, hard to get a read, or it's not a question of getting a read. It's unreadable.
It's unreadable.
Right? And so why play that play? So typically when someone is involved in a stock, they have a bias, right? They know something. They think they know something. They've done some work. Someone told them, they read a report. They have some view about commodity. But if you just were to take the price action in its own right, there's nothing here that says buy or sell, other than, yeah, okay, it's at the prior lows and maybe we get a bounce.
We're into week 4 of the market matrix. So let's take a look at this. If you haven't signed up already, you should, because this is our AI generated podcast. And just so you understand, if you haven't heard already, whether it's Carter, myself, Amanda, Timmy, Dan, Jacob, Bill Hockman, whoever it is, we throw stories, each of us, to Amanda and Jacob and Timmy to sort of take a look at. We try to pick out the best 4 or 5 different stories, and we put them in this AI generated, I think it's Perplexity. Dan can explain a lot better than I can, but it basically, using a voice we call Brunson, will provide you with a 5 to 10 minute podcast at the end of the day, market close, that gets you caught up as to what we thought were the most important stories of the day. And you know what, Carter? We're getting some traction. So if you haven't signed up, take a look at this, CBW. I know you have already.
Yeah. And, it's new and interesting and innovative products like this that are important. Always looking, searching, finding things that have value add.
You're the man, Carter. We have an auction in about 25 minutes, so take a look at that in terms of what it means for the bond market, potentially the broader market. Thank you always for your time. I apologize for going early today, but thanks for indulging me. Carter, you're the man. Tomorrow, Juneteenth, obviously a very important holiday. Banks closed, market closed, but things will still be moving sort of in the ether out there, and then we'll pick this up again on Thursday.
All right.
Thanks, Carter.